Kaspa just crashed 50% in 90 days, billions evaporated across exchanges in a single weekend, and while everyone's screaming about the bloodbath, Kaspa's founder Yonatan Sompolinsky drops a bombshell that changes everything. The crash wasn't real. He's calling it a ghost swan, a market meltdown caused not by economics, but by the order your transaction gets processed. Yonatan says we've been fighting the wrong war. Forget block size, forget fees. The real enemy is transaction ordering, and he's got a plan to fix it that could revolutionize DeFi forever. Welcome back to the channel, Crypto Fam. If you're tired of getting wrecked by market chaos while whales somehow always exit at the perfect time, you're going to want every second of this video. Smash that like button, hit subscribe, and turn on notifications because what we're covering today isn't just about Kaspa, it's about the future of how crypto markets actually work. Kaspa's having a moment. The KAS to USDC pair just launched on Bybit EU, giving European traders fresh liquidity and easier access to trade against stablecoins. That's solid infrastructure news. But here's what's wild. While retail panics and dumps at a loss, the smart money is quietly moving. 4 out of the 5 largest KAS outflows recently came from centralized exchange wallets. Translation: big holders are pulling their coins off exchanges and locking them down for long-term storage, staking, or preparing for Layer 2 participation. This isn't capitulation, this is accumulation disguised as fear. Meanwhile, BGIN Blockchain Limited, the parent company behind IceRiver miners, just went public and is listing on NASDAQ. According to Kaspa Daily, this means Wall Street investors can now get exposure to the hardware powering Kaspa's network without touching a single coin. Institutional bridges are being built while retail sleeps on it. But let's talk about the elephant. Kas dropped from 9.7 cents to 5 cents. That's a brutal 50% haircut that had paper hands running for the exits like the building's on fire. According to trader YStan on X, this kind of correction is textbook for early proof-of-work cycles. Painful, absolutely, surprising, not even a little. Network hashrate is at an all-time high, development hasn't slowed down, and the ecosystem keeps expanding with DEXs, KRC20 tokens, NFTs, and DeFi projects popping up everywhere. Yet retail sentiment is pure fear mode. YStan argues this is exactly where smart money loads up. Once Bitcoin volatility cools and liquidity rotates back into mid-caps, Kaspa could retest 8 to 10 cents before the first quarter of 2026. And hey, there's potential for new all-time highs if major exchange listings or Layer 2 projects launch. The question isn't whether Kaspa survives, it's whether you're stacking now or regretting later. But here's where it gets really interesting. Yonatan Sompolinsky isn't just watching the charts, he's diagnosing why the entire market crashed in the first place. After last weekend's market meltdown that liquidated billions across exchanges, Yonatan dropped a statement that should make every crypto trader stop and think. Crypto won't evolve until we fix how transactions are ordered. This isn't about scaling or gas fees. This is about fairness baked into the protocol itself. So, Yonatan introduces this concept he calls the ghost swan. It's basically a market crash that's totally avoidable, not caused by any real risk but instead by toxic transaction sequencing. In my opinion, this is honestly one of the most underrated insights in crypto right now. We've all seen it. You hit sell during a dump, but by the time your transaction actually processes, the price is already 10% lower. Meanwhile, some whale with, better infrastructure or just a faster bot exits at the perfect moment. That's not skill, that's sequencing privilege. Yonatan argues that last weekend's crash was exactly this. Violent, chaotic, but not fundamentally justified. It was a failure of ordering, not economics. So, what's his solution? A programmable on-chain transaction scheduler. Imagine a system where you can pre-commit conditional actions directly on-chain before market events even happen. No more relying on off-chain bots, centralized servers, or staying up at 3 in the morning to manually react to price swings. This scheduler would act as a coordination layer, allowing markets to respond automatically and fairly under stress. It removes latency advantages and turns human reactions into code embedded in the protocol. Think about what this means. You could program your wallet to automatically execute a stop loss if Bitcoin drops below a certain level, or to buy the dip if a specific condition is met, all without trusting a third party or worrying about network congestion. A well-known crypto analyst might call this revolutionary, and honestly, I agree. This could fundamentally change how decentralized finance operates. Yonatan's vision also builds fairness into the protocol layer itself, rather than leaving it to private bot networks and MEV extractors. Right now, maximal extractable value is a dirty game where sophisticated players profit by front-running, back-running, or sandwiching regular users' transactions. A programmable scheduler could level the playing field by making transaction order fair and predictable. No more getting wrecked because someone paid a higher gas fee to cut in line. In my view, this really shifts DeFi from reactive to proactive. Instead of markets crashing and then everyone scrambling to respond, the system could self-stabilize under stress. Imagine liquidations happening smoothly without triggering cascading failures, or whales unable to manipulate prices by gaming transaction order. That's not just better, it's honestly what DeFi was supposed to be from the start. But this isn't just theory. Yonatan is actively calling on Rust developers, ethical MEV researchers, and builders who believe crypto should fix finance, not just reinvent Wall Street's worst habits. He's using this market chaos as a rallying cry. If his vision is right, the next major evolution in crypto won't come from faster blocks or cheaper fees. It will come from rethinking how we order transactions at the protocol level. Now back to Kaspa specifically. While Yonatan pushes for industry-wide change, Kaspa's fundamentals keep strengthening. The network hash rate hitting all-time highs during a 50% price correction. Well, that really tells you everything you need to know about miner confidence. These aren't just hobbyists. These folks are investing serious capital into hardware because, honestly, they believe in the long-term vision. Development hasn't slowed down at all, even with the current market conditions. The ecosystem just keeps growing with new DeFi projects, NFT platforms, and token standards launching on a pretty regular basis. The IceRiver parent company going public on NASDAQ is huge for legitimacy. Institutional investors who wouldn't touch crypto directly can now buy stock in a company that manufactures Kaspa mining hardware. This creates indirect exposure and brings Wall Street money closer to the ecosystem without requiring them to understand private keys or self-custody. That's bridge building that matters, and those massive outflows from exchanges. So, according to on-chain data, this isn't panic selling. It's actually strategic repositioning. When big holders move coins off exchanges, the liquid supply decreases. And, basic economics tells you that reduced supply plus steady or even increasing demand equals upward price pressure. Whether they're preparing for staking, layer 2 participation, or just holding for the long term, the net effect is bullish for price stability and helps reduce volatility. YStan's price prediction of 8 to 10 cents before the first quarter of 2026 actually seems pretty conservative when you factor in potential catalysts. Major exchange listings could bring in fresh liquidity and attract retail attention. Plus, Layer 2 project launches could unlock brand new use cases and utility. And if Bitcoin enters a bull phase pulling liquidity into the broader market, mid-caps like Kaspa historically outperform during those rotations. The setup is there. It just requires patience and conviction. But patience is hard when you're watching your portfolio bleed. I get it. That's why understanding Yonatan's Ghost Swan concept matters beyond just Kaspa. If we can build systems that prevent artificial crashes caused by transaction ordering failures, the entire crypto market becomes less stressful and more fair. You wouldn't lose money because your transaction got stuck in a mempool, or because someone front-ran your order. You'd compete on strategy and timing based on equal access to execution. Yonatan's challenge to the industry is basically asking, are we here to build a better financial system, or just recreate Wall Street with blockchain paint? So where does this leave us? Kaspa's bleeding, builders are building, and the founder just proposed a solution that could change how all of crypto handles market stress. Whether you're holding KAS or not, paying attention to transaction ordering as the next frontier in DeFi is smart. So, this isn't hype, it's fundamental infrastructure improvement that benefits everyone. Hey, if you found this valuable, check out my other videos where I break down Kaspa's technology and market cycles. I've got some deep dives on altcoin rotation strategies that'll give you a serious edge, for sure. And, drop a comment letting me know what you think about Yonatan's Ghost Swan theory. Do you see it as revolutionary, or is it just academic theory? Oh, and don't forget to like this video, subscribe if you haven't already, and hit that notification bell so you never miss an update. The crypto market moves fast, and honestly, staying informed is how you win in the long run. Just a quick heads up, none of this is financial advice. Cryptocurrency is extremely volatile and risky. You could lose everything you invest. Always do your own research, never invest more than you can afford to lose, and consider consulting with a qualified financial advisor before making any investment decisions. Trade safe out there, fam.